Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, September 13th. That would be lucky, September 13th, right? At 3:30 p.m. Eastern. Well, Wall Street's main indexes rose today as investors reevaluated the possibility of a bigger interest rate cut by the Federal Reserve next week. Traders' bets of a 50-point basis point rate cut jumped overnight, now standing at 43% compared with 14% on Thursday. That was yesterday. CME's FedWatch tool showed. So on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 Spider, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $561.37. Now, that's down slightly from the July 16th all-time closing high of $564.86. After making that all-time high, the SPY rolled over. We had quite a time after that all-time high was made. The SPY rolled over, dropped below its 20-day, tried to rally a little bit on top of the 50-day here at the end of July, then gapped down, couldn't do it, gapped down below its 50-day moving average on August 2nd right here. And that it opened up on that day at 535.75, but it couldn't rally from that day, then gapped down on a day most all of us remember, August 5th, to open at $511.64. So that was, as we say, one quite rude awakening on that day. However, from that morning, the SPY rallied for 3 weeks very, very impressively, back up its 20-day moving average, back up over the green line, its 50-day moving average, and then traded sideways for about 2 weeks in a very nice, orderly, narrow range from that traded here from about 555 to 564, just back and forth, back up near that all-time high, then gapped down, lost my place here, then gapped down and rolled over and dipped below the 20-day and the 50-day for 3 days, then rallied back up again this week to where we are now, again at $561.37. Now we have the 20-day, the red line coming in at 555.86. We can call it 556 to make it easy. We have the 50-day coming in here at $549.71. So it's trading just above these two averages again. Now that's a good thing. At the moment, we know that from these prior highs back here in August at 564, and then of course the prior all-time high back here at 564.86, almost 565, that is putting some pressure on the SPY right now, but who knows what will happen next week, right? So those are the resistance lines, 564, 565, right in there. As far as support goes, again, price is above the 20 and 50-day moving average, so it's potentially got some potential price support with those two. Call it 550, 555. Then the lows down at about 540. The September lows so far at about 540. That's potential price support. And down to the 200-day moving average down here at 515, 516. If we want to, we can, of course, take out our crayons. Whoop, I'm not doing that very well. Take out our crayons, and we can draw a trend line coming up like this. We can draw a shorter one coming up like this. We can look at this and go sideways, and we can say, wow, we could see a triangle forming here. And we know that when triangles get closer to the kind of squashing, price squashing power here. They blow apart at some point, either go way up or way down. Who knows? Maybe, and I'm only saying maybe because I can't read the future, maybe the Fed announcement next week will send the SPY higher. We don't know. We don't know if it'll be 50 basis points or 25 basis points. So we've got to keep an eye on this. We know these resistance levels here. So it is going to be important next week with the FOMC rate decision coming out at 2 p.m. Eastern on September 18th. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, is the ETF that closely follows our NASDAQ 100 index, the top 100 non-financial stocks in the NASDAQ stock market. The NASDAQ 100 is home to momentum stocks like NVIDIA, Meta, AMD, Apple, Microsoft, that whole group. Now, when I captured this chart today, the Qs were trading at $474.91, just atop, not over too far, but just atop the 50-day and the 20-day moving averages, which are both coming in here. We're going to have to call it $470 because they're only a few cents apart. The 20-day looks like it would like to come up and cross above the 50-day, which is always bullish if it happens. Right now, it's just in the process of trying to do so. We don't have very high volume today, if you look down here, as compared to other days. So we've got kind of low volume at the moment, at least. But we can see where it is positive, at least that. So we're trading at $474.91. That is about, I'm looking for my recent all-time high. The recent all-time closing high was back here on July 10th at $502.96, right back up here. So that was the all-time closing high. Now, after making that high, sort of like the SPY, but more dramatically, the Qs rolled over. And it fell below the 20-day, the red line fell below, tried to stay there but couldn't, gap down again, fell below the 50-day moving average, gap down and fell again, down to August 2nd, right down here to that candle similar to the one on the SPY, opened at $450.89, but couldn't hang that day, and then gapped down the next day. On August 5th, again, the day we all remember, gap down here to open at $424.71. Now, as we can see on that day, it didn't happen to the SPY, but the Qs are always more dramatic. So the Qs opened down here, as I said, on August 5th to $424.71 below the 200-day moving average, but you got to give the techs credit. They rallied and came right back up here, rebounded in a very impressive, very strong, very steep angle, went back in 3 weeks, went back up through the 20-day moving average, back up to the 50-day moving average through that, made an August high up here at $485.64. Excuse me, but that was kind of a lot, so it had to roll over here and sacrifice a bit to the sellers who came in, came down to a low here at 448 right here, but then rallied again back up, especially after we got news last week that, we may get an interest rate cut this coming week. Rallied back up here again to where it is now, again at $474.91. Again, we are above the 50-day moving and 20-day moving average here, just barely, but at least we're there. So we have potential price resistance up here if price starts higher again at 485, 486 right here. Then we have a little higher resistance here at 488, and then of course we have the all-time highs back up here at 503. So again, for support, the 20 and 50-day potentially at 470, nearby lows at 448, and the 200-day down here at 443. Hopefully we don't have to look back down here again at the August fifth low, but it's at $424 if you're curious. So we can draw a trend line here. If we want, it's rising, certainly higher lows, that's a good thing. Higher low here, that's a good thing. We can draw a trend line coming down over here, and once again, while we do it, we've got a triangle forming. So we'll have to see if price can blow up above it or hopefully doesn't fall down below it in the coming week or so. So again, we have to watch out for that FOMC meeting. Okay, our final chart today is a daily chart of the Global X Telemedicine and Digital Health ETF, the EDOC. We've looked at this before, it's been a while. The EDOC, or EDOC I'm going to call it, has 41 holdings. Top holdings include Doximity Incorporated, ResMed, Insulet Corporation, Quest Diagnostics, LabCorp. Now you can't see it on this chart, but in February of 2021, it made its all-time high at $23.04. And that was an all-time high in February of 2021, shortly after it was created. Since then, it gradually fell. You can't see this either. It gradually fell down to $12, $13 range in 2022 and 2023. Then fell in October of 2023 down to about $8. And again, you can't see that here, but it rallied from there slightly. And we can see on this chart where it came in kind of a disorganized chart here, but where it came in in January and February of this year, kind of drifting sideways here between $9 and $9.79. Then it fell down to April lows. Everybody had April lows. Fell down to April lows at $8.41. Then rallied back up here in May, back up to $9.60, so that was good. Then came down, we can almost see a little, if we want to, we could see a little head and shoulders here. Sometimes they do make sideways motions. However, this one finally gave up, and then price fell back down here in July, down to $8.50, which is slightly higher than it was in April at $8.40. Then rallied back up in July, fell back down again the first part of August, back down to the August low again at $8.50. So you can see it keeps testing this $8.40, $8.50 line here. And then, as I said to you earlier, it did come down in October 2023 to about $8. So this $8 line here seems to be pretty important, at least now, for the EDOC. We got another dive, as I said, in August down to $8.50. Then we got a strong rally back up above the 50-day, above the 20-day. And at this point in August, it was moving back up, got back up above its 200-day moving average and looked like it wanted to keep going here. It did go back up to prior resistance, and it broke out to an August high here at $9.50. So that was a very recent high, but it looks like this is strong in here. And while this is all kind of disorganized, as we move through this chart, not beautiful, but getting better, it looks like it might be getting a little more organized. It came back up, as I said, up to $9.50, back down to the 50-day moving average, and then in the last week broke up and out again up to $9.49. So it's trying to break out here. In the long term, it does have support at the $8 mark, which is good to know. So what I'm going to do here is, a lot of things are way overbought right now, and I don't really like to buy too high. So I'm looking at EDOC here. And again, it's the Global X Telemedicine and Digital Health ETF. So that may become even more, digital everything seems to be becoming more important. And evidently these companies have pretty strong sales growth. So just kind of a bottom fishing play here. So what I'm going to do here, I'm going to watch it in the coming week. And if the EDOC can remain above the 50-day moving average, 50 days coming in here at $9.09. Okay, so I'm not giving it a heck of a lot of room, but I'm giving it some. So if the EDOC stays above the 50-day moving average, which is coming in again at $9.09, I will add a small position of the EDOC to my trading portfolio with a stop below the 50-day moving average at $8.94. If and when the EDOC can trade above, look left here at that high with me, if I can draw a straight line. If and when the EDOC can trade and rise above $9.85, I want it to go above that high. If it can rise above $9.85 and close above $9.85 for 3 days, I will add to my position, and by then, of course, my stop will be a trailing stop. So you may want to keep an eye on the EDOC in the coming week. And now check out this news from ToniTurner.com. We've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless trading programs. Trade the Trend to Profits, right down here, I'm going to talk about first. Trade the Trend to Profits shows you how to enter, manage, and take maximum gains from long-term trades. With this strategy, you can gain 20%, 50%, even 100% and more, and spend less time researching and less time monitoring your open trades. And more importantly, you'll know when to buy, how to easily manage your position, and know exactly when to take profits. Our new discounted price for this program is only $127. And you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever-popular 7 steps to successful trading to how to swing trade successfully, a great program a lot of people love. Of course, the one we're talking about here, Trade the Trend to Profits, one of my favorites. How to read charts, great for novices and those who want to catch up and freshen. 3 winning setups, which are great for short-term trades, and Bottom Fish Like a Pro, which is kind of like what we're looking at the setup today. Find out how these timeless online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace whenever you want. So be sure to check them out by going to the link on this screen up here, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.